Welcome back to the channel. In this video, I'm going to make a case here. So why I think we may see, let's say, a 300 point drop between now and the week of Christmas. And just to kind of bring everybody up to date as to what the charts are looking like right now. So SPX is trading at about 68.71. We do have PCE data coming out in the next 15 minutes. But we've essentially traded back close to our highs here, right? So we've had this AI scares, people like to say, and we've traded up ever since then. We're essentially sitting above our previous swing high here, and we're only, what is this, basically, 70 basis points away from all-time highs. So a very swift recovery. On top of that, I mean, as you guys could basically know at this point, I mean, we do have December, normally seen as pretty bullish month. The Christmas rally normally begins about maybe towards the tail end of this week here, these last few days here, as well as the actual Christmas week there. But there's still some time between then and there, right? And I think we can actually see some downside. And why I say so is due to the option positioning that market makers have going into Christmas right now, or more particularly the third week of December, which is that monthly expiration. So what we're looking at here, this is a vanna chart, right? So vanna is a second order Greek. It's essentially the change of volatility depending on the change of, the changes on your deltas when volatility changes. In a simple way, just think about it. If you ever bought an option, you know that when the implied volatility of an underlying stock goes up, the options gain value, even though it might have even been in the opposite direction, for example, right? Because obviously, if you're long an option and volatility goes up, the option value will go up as well. But we're looking at this from the market maker side of view, right? So they're the ones kind of hedging all the options that are being bought out there and how their book looks like. Now, normally speaking, a vanna chart in a bullish environment, the way it looks like, it doesn't look like this. It looks more like a smiley face, where as you look to the left of spot price, it goes up. And when you look to the right of spot price, it also kind of climbs up. The reason for that being is that normally speaking, in a bullish environment, you have customers being retail institutions, whoever it might be, they're buying puts, right? They're buying some sort of protection, let's say, which means that the market makers are long those puts. The market makers are short those puts because they sold them to the customers. The customers are long those puts. And if the market makers are short those puts, that means the market makers are carrying long deltas on those puts. Because again, they're short those puts. The customers are carrying short deltas while the market makers are carrying long deltas on those puts. On the flip side, what you normally again see in a bullish environment, which you can kind of see right now for this week here, that's why you have a smiley going up here, is customers selling calls. And that happens because, covered calls very often get sold into the market, whether it is in 0 day or we can actually look at the 0 day chart right now, maybe get an idea. Just look at the deltas here. So what's happening, for example, today, 0 day expirations, we can actually see customers are buying some puts below spot price here at 60, 68, 65, but a bunch of them are being sold. So puts are being sold at spot and above spot. But calls, as you could see here, again, this is from the market maker's side of view, right? So if market makers have long deltas on these calls, that means that they were sold these calls. So customers are actually selling calls. So we have a situation of, except at the money. At the monies, you can see customers are essentially buying calls here, but they're selling a little bit out of the money, and actually some got sold in the money. But going back to what I was saying here. So yes, selling calls, market makers being long those calls means they have long deltas. And again, that is positive. Now, normally speaking, when you have the smiley face and you have such a bullish structure, then as implied volatility drops, market makers will actually help support the market when it falls and help push it up. But we're not going to be seeing that going into the third week of December. And normally speaking, monthly expirations, they have the biggest influence on market moves the week of expiration and the week prior. So these two upcoming weeks is when there's a lot of influence from options on the market itself. And what's concerning is the steep fall here, as you could see as we go down. Again, we kind of actually want that to go up. We might actually be able to see that on SPY, for example. So not even entirely, but notice how on SPY here, it kind of crawls back up. So if SPY were to actually drop down to 650, for example, the zero, that $0 would be, the x-axis would be down here. So we actually would have a smiley face if none of the option data changed at that point. But you see it curling up, right? So this tells us there's a bunch of puts purchased by customers starting at that 650 range and back, right? That's what that tells me. So we have this cascading all the way down, and why that's the case is that, again, this doesn't happen that often, very rarely, but look at the amount of puts that were sold by customers going to the third week of December here. Remember, the market makers are short all these deltas, which means they're long these puts to be short these deltas. This is for the market makers side once again. We want to be seeing green bars, okay, for market makers to be supportive. But because all of this is, because the market makers are just short all these deltas across the board, they will amplify the move to the downside, which makes the move very, very quick. So as we've seen the level of volatility, how quick the market can move, this can move down within 2 weeks down to the 65, 66 range very, very quickly because the market makers, again, short these deltas. Now, this in its own self is not a catalyst for the market to go down. All this is that, hey, if the market has almost any reason to retrace, it can retrace extremely quickly, unless the picture changes. So we can kind of see there's a little bit blurbs here of some puts being bought, right, at various deltas here, but this needs to go up a lot more than it currently is. On the call side here, so let's take a look at what's happening on the calls here. So again, we want to see green bars above spot price. That's telling us the customers are selling calls. We want market makers to be long those calls. That's going to help aid in pushing the markets up higher. There were a bunch of calls sold at 69.50 and 7,000. You could see that's actually, that's not bad for the bulls to see that. This can maybe continue growing. That's going to help attract price towards there. But nonetheless, we still have a lot of calls in this region here down to 67.50 that were bought by customers. And then only then do we see all these calls that were sold by customers down here, between 66 and 6,700. Anyhow, I'm kind of babbling on here. But what I'm getting at here is, let me kind of look around here for a second, is these strike prices here, especially like 6,700, for example, those would be targets as to where I think that there is a fair chance of us moving down to in the next 2 weeks. Markets have obviously shot up almost straight ahead. It doesn't take a genius to say, hey, there has to be some sort of retrace here. Right now, it may just retrace only, let's say, 75 points, consolidate for a week and rip higher. That could very much be the case. I think it goes lower than that. I think we can come back towards the lows that we did see just November. I do think that those will likely be lows that you do want to be buying if we get a change in picture, meaning maybe puts start getting bought more heavily, calls start being sold again. Now keep in mind, obviously, a lot of this bearishness is specific to the expiration for this month. So once those roll over, it's a completely different story. Something else I want to point out: some people track this now. I think again, this is not really analytical, but we can still kind of look at this, right? AAII survey, right? Everybody's aware of it. I've had a little bit of a bullish push here. Again, this is just an idea of sentiment that's going around right now. And we've seen an increase in bullishness this week, a drop in bearishness. If we look at the a bit more historical data here on it, we can see that there is a 13.5 spread between the bulls and the bears here. If you actually look back in time, for this year, for example, if we just kind of look at any time that we even had a double-digit spread. That was positive. I'm just looking for this here, I think right there. Okay. So for starters, this is the second highest reading for this year. And this right here, right, October 9th, I believe that actually marked a fantastic spot to be a seller. That was right before that original drop. Let me see if I can bring it around. Yeah, basically right here. So we had one quick drop soon after. The July 3rd signal that week was not actually that great. So again, like, you know, it's not foolproof. Basically right here, we did trade sideways, but we continued higher after that. You can see though how the spread actually dropped very, very quickly. So we traded sideways and the spread basically collapsed. And then we ended up pushing way higher. So that is something to note there, that we did still trade sideways when the spread was that high. And then we had January 23rd, which pretty much right there, which, you know, we did see a drop, a choppiness and so forth. And then, I mean, this is tariffs. I mean, I thought you can kind of say that was, you could have said by then. But anyhow, that's just a very simplistic way of looking at sentiment within the market. And that also looks a little bit frothish, right? Combine that with the fact of what I just essentially pointed out, that market makers are long a lot of puts at the moment going into the third week of December. And that can help provide a lot of quick downside. So it's either, you know, obviously not financial advice here. You could try to speculate on some downside movement from here. Maybe you can look to hedge some of your positions out. As I kind of look at the overall markets and some positionings here, I see Bitcoin struggling once again today. Nas is leading at being up 60 basis points. Let's see what else we have here. Nvidia, you know, I do have a video on Nvidia that we shorted Nvidia due to its failure on its earnings day, right? The gap up, and then we essentially closed lower on the back of extremely good earnings. Keep in mind, we have yet to breach the close before earnings, which is my stop on this particular trade. And you know, Nasdaq has bounced back. It's trading above 180, but it hasn't managed to, you know, it's without a doubt, it's lagging SPX or Nasdaq, whichever you'd care to look at a little closer, right? You could see, you know, SPX is, you know, trading at new highs, let's say, for the last, you know, 30 days. And you know, Nvidia is not. Is this a signal for the markets that the largest public company is still struggling to get off its ass? It could be. It could be a canary in a coal mine. You know, in previous instances it was, except the very last instance, which was, I think it was lagging. When it was lagging over here, the major indices, but then it ended up catching up, like right here. This was its catch-up thing. But prior to this, the indices were moving up higher, but Nvidia was not. It was just chopping about. So it's not a foolproof signal again. That's what I wanted to share. So I guess we'll see, you know, what's going to be happening over the next 2 weeks. Again, this is an extremely bullish month. You know, it's supposed to be low volume, low volatility. I think that's not going to be the case due to market maker positioning, but we'll have to see. But other than that, if you enjoyed this video, please throw it a like and subscribe if you haven't. And I'll see you guys next time.